Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, April the 13th, 2012, and it's Friday, so like we do every Friday, I'm going to go over all the major markets that we track at PerfectStockAlert.com. We update every single night on our website, so I'm going to go over all of them so that you know everything I know moving into the week ahead. It's something we do every single Friday, so it's definitely a video you'd want to be watching. If you watch any of them, watch this one. Before I get started, I got to make an announcement. Yesterday, our webmaster, he was like IMing me and Facebooking me galore because our traffic on the website was just exploding, and he was like, "Hey, what the heck?" You know, he's deaf, so he doesn't actually watch these videos. He doesn't see me ask you guys, "Hey, you know, share our videos online, refer your friends," stuff like that. So he was like going off, and he was like, "Hey, man, what are you doing? Why are these people all on your website?" And I was like, "Because our users are awesome." So I just want to say thank you very much for that. I really appreciate it. It helps us, and that helps us help you. Okay, so let's get to the market analysis. The first thing I want to talk about is, of course, the Dow Jones Industrial Average. We're going to start with this one today. We've talked about this in the past, and we've shown you many different markets. We saw this major sell-off coming. Took advantage of it on many different charts. We didn't take advantage of it on the Dow Jones because we got stopped out by about $7 a share. Our stop was right here, set off that high right there, and we got stopped out right there. It really sucked, but anyway, it happened. Then we saw this bottom reversal situation happen here, and we said, you know what, I don't like that. I'm going to pass. Not going to be a buyer because I don't think it's the real bottom. How do I know that? Well, because there's no hammer candlestick formation. Hammer candlestick looks like that, and if you don't get that, then you're probably not really seeing the bottom. You saw something like that happen here. You got a bounce from it, but it wasn't really the bottom because you ended up going lower again. Now we're rolling over here, and this is why we told you not to be a buyer. We saw the potential for the move to the upside here, but it would likely be a series of lower highs compared to this previous one. So it could happen here, could have went like this and did like it did, or it could have went up higher and then done this number. Right now it's turned over looking like this is the top, like we've already seen it. It's a little bit shallower than I would have expected. I would have looked for a move at least up to the middle Bollinger Band line. That didn't happen, and we're rolling over already. So there's going to be some debate here. Is this the peak? We're rolling over, and I'm saying that it is. That's why I've got this blue arrow indicating that I would start shorting it, and I'd set my stop off of this high here, calling that the peak. There is one thing I don't like about that. There's not a shooting star candlestick at the top there. That's something I would like to see. It gives me that much more confidence to short here. I don't have that, so that does bother me. But the trend is, like I've said before, it is down. We're making lower series of lows, lower series of highs. So I like the idea of shorting because I'm working with the trend. Also on this one, I have a little ace in the hole here. You'll notice this sell-off right here on this down day we had over here. You look at the volume on that, okay? Greater than the rally volume that we had on these next 2 days, right? Here and here. And then you get this sell-off. Now this sell-off doesn't actually go all the way back down to where we were, which I would have liked if it had. Would have given me that much more confidence on the sell side. However, the volume does. The volume supersedes the previous 2 days of buy volume. And that, by looking at just that, if I were to actually analyze the volume, I would say that the price activity did all the way go down to here. So the fact that it's not there yet may be an opportunity for shorts to get in there before she gets too oversold and so forth and so on. So anyway, that's another reason why I'm looking at this chart saying, yeah, the bears are definitely in control of the volume, and I believe they will ultimately be in control of the price furthermore next week. So that's something to keep an eye on. However, there is one word of caution always, and this time around it's earnings. Earnings are going to play havoc with the market right now as we're going through that. And however, as I've already mentioned, the trend is down, so you want to work with the trend. And that's why I'm looking for sell opportunities, not long opportunities. I warned about that before it happened, and now those of you who went long, you may be peeing your pants or going through a very difficult week or weekend. Sorry about that. You got to learn to wait for the right opportunities. And we told you this one wasn't right, so we passed on it. And right about now, we're feeling pretty darn good about that. Okay, let's have a look right here at the Australian markets. These actually haven't started selling off yet, but all the other markets I'm going to show you today have. That basically means that one chart cannot rally all by its lonesome. If the other markets are truly selling off, this one will get pulled down with the rest of them. Therefore, I would take the bounce opportunity in Australia's market as a sell opportunity. However, I can't call the exact peak here. It's not something I intend to, or attempt to do here. So I'm going to use this previous high here is where I set my stop off of that. As soon as this market here rolls over, let's assume that the next trading day she rolls over and starts moving to the downside, then I'll take the stop loss limit and advance it on down. But until then, I want to leave myself a little bit of room for it to breathe to the upside without stopping me out. Okay, so that's what I'm looking at right now for Australia's market. Again, I would not be long. The French CAC 40 index, this one's actually already done the sell-off confirmation, being that it's sold off today and going lower than it did before the bounce. So it's confirming itself. There's no question in my mind that this is a short opportunity with a stop set off of this high point here. That's a beautiful opportunity there. And again, if the European markets are doing it, if you're seeing issues with the Hang Seng or China's markets with the really poor figures they got out this week, all of that's going to be pulling on the markets, and that means that the U.S. market is going to be able to stand alone. It's going to have to do what you're seeing other markets do. So this can kind of be a leading indicator of what the U.S. markets are going to do. Obviously, French is going lower, and if we're seeing the same thing with several other markets, then it makes sense to assume that the U.S. markets will follow suit. That's how this actual peak happened to begin with anyway. We saw the head and shoulders formation on European markets long before we saw a peak form in the Dow Jones or the S&P or the NASDAQ. So again, you can use these as leading indicators. Here we have the German DAX composite showing the same overall story. Note the previous low point. The reversal here, we told you we wouldn't be a buyer of that because it's not a real bottom, we didn't think. We thought we were going to jump up here and then reverse. Exactly what happened. It moves over. Now you can start shorting with the stop set off this high, is calling that the peak. I like this a lot. Gold market showing a nice bearish engulfing candlestick of the current candlestick versus the previous one, currently wrapping around the previous bullish candlestick, showing that there's really no strong buy pressure here. But I wouldn't really short this guy either. You could if you wanted to, but I just don't see anything in this chart that's all that impressive to me. It's really just moving sideways, ever so slowly going lower. I guess you could short it if you wanted to. Simply set your stop right here, but I'm not going to. I'm going to go ahead and pass on this one. I haven't traded this one in a couple of weeks, and I just don't see any opportunity right now that I really want to be involved in. The Hong Kong Hang Seng Index, this is another one that shot up to the upside, and if it starts to roll over with the other markets, I will jump on it as well. For the moment, I'm not. I'm just sitting on the sidelines. I could say, you know, that it's last candlestick formation right here is a short opportunity with a tight stop right here. That may just be too tight. We may get stopped out like I did on the Dow Jones earlier a few weeks back. You get stopped out and she reverses slower anyway. I don't want to do that, so I just want to wait for the reversal to start to happen. We see something like this activity, the following candlestick formation, and then I'll jump on it. But right now, I'm just going to wait on it. Just to be perfectly clear, obviously it wouldn't be a buyer here. Those of you might be thinking about that simply because she's in an overall downtrend. Lower series of highs, lower series of lows. I don't want to be a buyer in that situation. The India Bombay Stock Exchange. This one, I'm taking another short opportunity on this one. You'll notice that I've marked the chart here, and these charts are kept on our free website at perfectstockalert.com. Updated every single night. You can check them out whenever you like. We update the advanced stop loss limits and so forth and so on. Right now I've got the stop set right here. This one we entered back here late on the short trade, being that the other markets we'd already taken short positions in, had made lots of money on them, and then this one gave us an opportunity to make a little bit of money before we saw that little bottom burst in the market, and we got stopped out shortly after entering it. We did make a little bit of money, but not a lot to nothing all that important here. But there's something else going on in this particular market that I want to bring to your attention. It hasn't happened here, but you're going to see it in other charts. Note this low point here, followed by this one here, and then this one here. This is a little support lines you've got going on in this market. Well, this trading activity we have here to the downside looks really strong, like it's going to break below that, and that's my catalyst to the downside. You break this support line, then you're not actually basically, if you break this support here, and then all of a sudden this support line becomes resistance. So that's going to be the great opportunity for getting short. You actually want to use that, and you're going to see that in a lot of other charts I'm about to show you, that you're breaking down a major support line, and that's why you're able to see a much lower, even though we've already sold off a good bit this week, you can actually see a great deal more selling. The EWJ, or Japan iShares, this one again showing that same support line. You've got one over here, one here, another one here. This little support that you have here, previous resistance here, little support line there is actually breaking down. You had a breakdown of that support right here, and now you jumped back up here, tried to mess with it, couldn't get through it, and you reversed again. You're basically finding that this, once was acting as support, is now acting as resistance. It doesn't have to work in this way, even though I'm showing you that I would take a short position on it, so and so on. It doesn't have to work that way. Over here, we tried it. When she first found the resistance, fell down, failed again, started to roll over. We took the opportunity. We say that was a short opportunity. However, the very next day, she gaps up way up here above our where we would set our stop, so we could never enter the trade. And she just took off without us. That was fine. We never got short, and it didn't cost us anything. We just saw it as an opportunity, but it didn't end up working out. Then we pulled back to the same level, found support. That gave us an opportunity to be a buyer. We could play that one, and then she just bounced around in here for a while within this overall range. But now we've come back down here, found support. Again, we tried the same thing going along. She didn't work out because the next day she gapped below where our stop would be right here, so we wouldn't mess with it. Then she sold off a little more. That caught our attention because now she's showing strength on the sell-off below this previous support. So something's breaking down. So the next bounce to the upside, we want to see how it responds to it. Let me clean that up a bit. All right. What you get is a little jump to the upside, unable to break out, and she starts to roll over again. I want to take it as a short opportunity with a tight stop right here at the 985 high. The London Financial Times Index, or the FTSE, this one you'll also notice the same breakdown pattern. We've talked about this in the past. Over here you had a really nice consolidation period, a nice support, and that was an important level for us. We bounced off it a couple different times, and then we got over here and we closed below it. Then we bounced up, and now we're rolling over again. Well, this support right here is not actually there anymore. I expect we're going to fall right through it. We're going to have to wait and see because I don't have volume on this chart, so I couldn't tell you whether or not the volume is confirming the move or not, and that's why you don't see a blue arrow pointing down saying I would short here. However, if you are looking to short here, set your stop off this high because that's what you're saying. You're saying that this is the high, so you're going to set a stop off of that point and then trail it down as you continue to move lower. That's how you would play that. I'm going to pass on that one because I don't like it as much as other charts. The NASDAQ Composite, this one, same overall story. We had a nice sell-off going on here. This one we call the exact peak here. You have the high point here, low point, lower high, lower low, then a reversal to the upside. We told you, even though we got stopped out, we told you we would not be a buyer of this because we didn't see a hammer candlestick. This is actually a very telltale candlestick telling you to look for more move to the downside here. Blah, 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 and she runs up here for a couple days, reverses, and spins the other direction. Yeah, I'd be shorting that with the stop set right here off of this high point. That's what the chart's marked as such. And you'll notice this, again, is a very important level. Here's your previous resistance point, and there's your break through that a little bit, and now you question whether or not we're going to be breaking down this support. Well, logic stands. If you're breaking down major supports in global markets, then to see one happen here wouldn't be a surprise. The other markets that we've talked about before would simply be leading indicators telling you that it's going to happen. So that's the logic behind this trade here. The XOI Oil Index. Oil is a great indicator for the overall economy, and if it's moving lower, well, expect the overall economy to be doing the same, and therefore you can expect also the markets to follow. So this is just another leading indicator you can use. However, I set the stop a little bit different on this one. You can do it however you'd like. I've simply used this previous formation here, the inverted hammer here, as being the stop that I'm using. I will adjust that if we break lower. Once we get below this line here and close below that, then I'll start adjusting the stop loss limit. For right now, I'm not going to do that. But this is another opportunity you can trade to the downside. However, this one is pretty well extended from the peak that you saw here. That's something else to take note of. Whenever you've got a really big move to the downside, sooner or later you're going to get a good bounce to the upside. And this one, like I've said with the other charts, I really expected more of a bounce from the markets than we've seen. I'm not going to judge it and say it can't be a short opportunity, but I'm definitely going to say that if we did get this shaken off by the markets, I would look for the oil price to shake it off first. The UUP, or the US Dollar Bullish Index Fund, this one you could be trading to the long side. I didn't take the opportunity for the same reason that I've mentioned before. Whenever I get in this case we're looking at a bullish setup because it runs the inverse of the stock market basically. When people sell stock, they're in effect buying dollars, which drives up the price of the dollar. So whenever you're looking at this chart, you're looking at it from a bullish perspective, and that's why we were being a buyer over here and we got stopped out over here. But I was watching this pullback knowing that I expected the market's bounce to be fake. It's going to be a short-term situation before it reversed back to the downside. Therefore, I was looking for this guy to sell off down here and at some point give me a nice hammer candlestick formation. That would be an easy signal for me to say, okay, set your stop loss limit and be a buyer. And the next day if you get a higher high, so forth and so on. But I didn't get a hammer candlestick, so I let this one pass by me. The same basic thing happened with the overall markets. I let it sit there and rise, expecting to go a little bit higher, and then I get a shooting star signal, basically a hammer upside down. That didn't happen. So because of that, I'm just going to have to jump on board now on the short side, or on this particular chart. You could set a stop just down here up to 21.97, set 1 penny below that your stop, and then be a buyer at 22.16 or lower, looking for this to continue to move higher and confirm our inverse head and shoulders pattern, basically we talked about in the past, where you have this first shoulder formation here, the head formation, the second shoulder, and now you're coming up here. Once you close above this, you have confirmed the inverse head and shoulders pattern. You'll be able to take the distance between 21.74 to the neckline and measure that out, do the math on it, and then add that to the breakout point. You get a target of how high you expect prices to go before you hit a resistance line. Just a target, but gives you some idea. This again is another very bearish signal for the overall market, so that's something else to bring in to your attention here, something I've mentioned several times over the past few weeks. The Russell 2000 Small Cap Index. I've got a short opportunity on this one as well. Stop set off the 810 high, and I would expect this to continue to move to the downside here. This is the stop I would have here. Again, I would have liked to see a little more move to the upside here by the markets before we reversed and rolled over. So that is somewhat bothering to me. But other than that, I see that there's definitely no long strategy here. So I would be looking for this to take a short opportunity. However, there is some other way this could play out. Look at this overall pattern here. You've got this, what you can call the first shoulder. And you've got this, what you could call the head formation. Now, if for some reason we get good news or something happens next week and we can shake this sell-off and we start to move to the upside, I want you to watch this chart, because if she starts to fail at this level where she's failed at before, you're starting to see another head and shoulders formation, and that's a sell signal. It happens after a major rally to the upside has gone on for a while. We've seen that, and we're also seeing major head and shoulders formations in Europe markets, so that's could be another leading indicator basically. So be watching next week to see what happens. If the markets go higher, which is possible when we get stopped out of our short positions, see how high they go. That's going to be an important factor here. And then again, if she just breaks down and keeps going lower, obviously you just want to stay bearish. But right now, I'm so far from being bullish, it's not even funny. The S&P 500. This one, well, it's a pretty easy chart to analyze here. You could look at this and call it the same thing we've talked about the other ones. You can see this is the first shoulder, the head formation, and then basically this is where we found resistance at 4. We come up here and we find resistance at roughly the same point. Remember, it doesn't have to be exactly the same. They could actually be all cattywampus if they wanted to, but it wasn't. And it's starting to roll over again. You may be seeing another head and shoulders formation right here. This would be the support of the neckline, close below that neckline, and you'll be able to measure this distance out and say, okay, this is right here, I think it was the high, that distance there, take it down to the target, gives you an idea of how low price could go before you actually see a bottom. So that's another thing to point out and to take note of. I am willing to short it with a stop off the high. Let me clean that up again. Grab the tools. All right, here's the high that I'd set my stop off of right there. Again, I would have liked it to have been a little bit higher, but anyway, I can still use this here. And you'll notice again, we have a close below the 50 and then a close below the 50 again. Those are not bullish signs. The uptrend is breaking down. It makes sense that you're starting to see this guy fail here. You've got, in fact, a high point here, a lower high here, a low point here, a lower low here. She is in a downtrend. Take those opportunities to short, and that's what you got right now. Silver looks a lot like the gold chart, but it's just more consolidation, moving sideways. It may break down, but I'm just not going to jump on this chart at this point in time. We can do a lot of kicking, which is basically what this chart has been doing for a while, so there's no sense in shorting it. Kicking is basically when price goes down, goes up, goes down, goes up, goes down, goes up. It doesn't actually go anywhere, but sideways, and that's just building a floor or a support line. Again, it could break down, but right now I see no reason to jump on the short side. The TSX Canada's market, Toronto Stock Exchange, this one we've made a lot of money on to the downside here with this overall head and shoulders pattern we talked about many times in the past. And when she basically came around and found resistance at basically the same level that she'd found resistance before, we started using this as a short opportunity. She sold off for a couple of days, bounced off this neckline here, jumped up here, gave it a short opportunity, and sold off again, closing below it. At that point, we simply take this distance out, measure it out, and say, okay, that distance is how far we expect price to go before she stops and reverses. She got close to it and then bounced to the upside here. We told you not to be a buyer of that because we didn't like it, thought it would go lower, and she has has done that. I haven't taken this as a short opportunity with an arrow again for a couple different reasons. Number one, I see others charge this one. I'd like to see more confirmation before I did that. But also, there's a little bit of a wick at the bottom here, and sometimes that can indicate that your support wasn't there. I mean, you didn't find a bottom there, but it's really close. So what would happen a lot of times is you'll get a sell-off that'll go a little bit lower, and then you'll get a bottom. Or at that point, I want to be buying here, not stuck in a short position. So I'm going to let this one slide for now. Just keep an eye on it, okay? The VIX, or the Volatility Index, runs the inverse of the S&P 500. So when this chart's going up, you'd expect to see the S&P 500 going down, that type of thing, okay? And we've seen this one reverse to the upside. We've already caught that, made a couple dollars to the upside before we got stopped out. Here was our long strategy there. Made some money to the upside. But now we're just kind of watching it. There's a lot of volatility in the chart. I'm just going to leave it alone for now. What I'd like to see, and some of the things I'm going to be watching next week, is this high right here, 21.24. If this high gets taken out when we've not done that yet, that's something that's going to be important to me, because we've seen resistance at 21.24, 21.77, 21.98. If we break through that, you can definitely count on the market's gone lower. And when that happens, your trend will have reversed in the VIX, confirming the reversal in the S&P to the downside. You will have that much more reason to be bearish. And then, in fact, if we get a move like this, say price continues to move up here, close above that, I don't care if it's a single dollar, I don't care how far it goes, but any close above that line I've just drawn here would be an important level for me. And then the next pullback that we saw there would be a buying opportunity. I would look for a hammer candlestick formation, something like that, to be a buyer of, and expect the VIX to continue to move higher while the markets to continue to go lower. It's something that's a little bit further out, but it's just something to keep an eye on, okay? If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. And it's best if you help us by sharing our videos online. That gets us the most noticed out there, and that helps our website grow, and that helps us be able to provide new and better services for you guys, all for free, okay? That's pretty cool. God bless, take care, enjoy your weekend, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.